Executive Director at Inox Wind, is here with us to talk more about that. The block just happened. Devansh, afternoon. Thank you so much for your time. Working very hard. There's a lot of tailwind in the sector. I think, the way we discussed last time round, for 5-6 years it has been bad. So you are not leaving, on your team, of course, not leaving any stone unturned to take advantage of the tailwinds which the sector, present itself now. Talk to us about this block and the money raised will be the utilization which will be done.
Hi Ajay, good afternoon. No, certainly, after a long period of time, 5 or 6 years, the sector's coming back very, very strongly, as I mentioned last time as well. And naturally, being one of the select survivors, we're very, very excited about the opportunity in front of us. As I've explained many times publicly, our primary target has been to make Inox Wind net debt free. And to that extent, over the past 12 to 15 months, we've taken multiple strategic actions, including the current block, which was a step, a big step towards continuing in that direction. And I think I'm happy to say that I think hopefully we should be net debt free before the target we've set for ourselves, which is FY24 end. I think the fact that we were confident about the sector turning around and I think also reflecting the fact that we pumped in over 600 crores as promoters from our family office last year into Inox Wind. But what's very encouraging is that now investors, large marquee investors, have started to appreciate the fact that the sector is coming back. And actually, players who've survived, who have strong corporate governance, strong holdings, are the ones who are going to ride the wave for the next 10, 20, 30 years. So I think we had substantial interest, as you mentioned. I think, I can't mention names of stakeholders at this point in time, but very, very large domestic mutual funds, marqueest of marqueest names, and a couple of FIIs. So, and we are fortunate that we were able to do it on the block window. So there was actually no discount. We did it at market price plus minus the 1% block window. So that's what happened today, Ajay.
Right. Hi, Devansh. This is Ankita also joining in. So we spoke about the investors. So what were the questions that the investors were asking? What is the visibility for the sector going ahead?
Look, I think from the investor perspective, if I may say so, the fundamental thing was, is this for real? What's happening in the sector and the tailwinds which we're seeing and the massive demand which is expected to kick in. So naturally, given historically there have been a lot of policy flip-flops. Historically, the sector has been dependent on the government. I think that was one of the fundamental questions. I think the second thing was obviously credibility and corporate governance was something which was very important. And fortunately, at least for us, we've not had a single rupee of haircut from any banker or any creditor. We've stuck through the business, lasted through the pain. In fact, our family office, as I mentioned, pumped in 650 odd crores in this business during the period of pain. So I think that gave a lot of comfort to investors. But other than that, frankly, it was all about they were very clear about the macro scenario, which was massive. The question really was, is this too good to be true? And I think what's changed is renewables is the cheapest source of power now. There is no government backing whatsoever. I mean, in the sense that there is a lot of government push, but there is no subsidy element. And I think that really makes the sector very, very prime to grow over the next many, many years to come.
Mm-hmm. Devansh, you made a very pertinent point. No haircuts. And the focus, the management team and the promoters focus on corporate governance, which differentiates your company in the sector in a pretty meaningful way, I would say. I would also like to scratch that point a little more because it is creating a lot of curiosity in the market and investors we speak to. You have publicly stated about Inox Wind commencing the production of 3 megawatt turbine platform. How meaningful and significant would that be in the coming quarters when it starts adding to your numbers, the margins over there, and the superior technology which is involved?
Oh, look, I think that's a fundamental changeover which is happening. For us, our 3.3 megawatt platform is a very, very superior product designed for the Indian conditions for the auction market, given, tariffs are now, say, 3 odd rupees, sub 3, not 5 to 6. While we received our type certification from TÜV as well, a global accreditation body last month, I think we are primed, and we've said this publicly, that we're geared to start commercial supplies from Q3. I think, a couple of advantages vis-a-vis this product. So while many people talk about new technology and risks around new technology, in fact, those are some of the questions investors asked us as well. But the unique part about our 3.3 megawatt platform is that it's been operating globally for over 10 years, given the fact that, it was licensed from AMSC, one of our technology partners, from whom we also took our 2 megawatt technology. It's been running globally for 10 years, multi-gigawatts operating globally. So frankly speaking, I don't think you could have a more proven 3 megawatt turbine, at least in the Indian market. It probably has the longest history globally on the same product line. Also, I think from our perspective, I think we see substantial increase in our profitability on our 3 megawatt platform vis-a-vis the 2 megawatt platform. Having said that, I think this is going to be a win-win for developers, IPPs and us, because our profitability goes up significantly on 3 vis-a-vis our 2 megawatt platforms. Whereas at the same time, even for IPPs and PSUs and developers, their profitability goes up. The 3 megawatt platform actually reduces the cost of energy substantially compared to our 2 megawatt platform. And while we take a big chunk of the profit, we're also passing on a certain part of that saving to our customers. So I think all I can say is, historically, until 17, when the sector was doing phenomenally well, hopefully with our 3 megawatt platform, we should get back to our historical profit margins as we move forward.
Right, Devansh, speaking of profitability, you had mentioned that in FY24 you will turn profitable. Do you still maintain that guidance? And what is, give us a guidance, give us the visibility for the full year.
Look, I can't make too many forward-looking statements, but all I can say is, yes, we did say this is going to be a year of turnaround. I'm happy to say that in Q1, we've halved our losses. We've had a significant EBITDA profit. Not significant, I would say we've had a EBITDA positive. What we've also said publicly is every quarter should be better than the previous quarter. And certainly, we will turn around in terms of being profitable this year. Other than that, I'm sorry, I will not be able to make more specific financial information public at this point in time.
All right, Devansh, thank you so much for joining us today.
Thank you.